A very good morning to all the students out here. We are here for the CA Foundation course, Paper 1, Accounting, and we are starting our new chapter, that is Chapter 3, a bank reconciliation statement, which is a part of your course and a very important and a very easy topic of your syllabus of accounting. So we would welcome our new faculty, Dr. Chandra Bhanu Das. A very warm welcome to you, sir. So I would request everyone here to please be patient listener to listen to him. He'll and make you understand why this bank reconciliation is important, how is it important, and since you can also identify this topic, how important this topic is, because in usually class paper we get a question of around 10 marks or maybe sometimes around 5 marks out of this. Why this important? Since bank reconciliation is an important internal control tool. Bank statements, we deposit our money and we do all the transaction of our business through bank. So we have a bank statement as well as we prepare account in our cash book. Why the difference has occurred and how the difference can be reconciled. So the name itself suggests bank reconciliation, the reconciliation of our bank book with our cash books, or vice versa. So sir will help you, will guide you how to, why is it done, how is it done, what are the differences, timing difference and other nature of difference, and how it has to be done. So this all will be explained in this session, as well as for the another session that will be also for chapter 3, bank reconciliation statement. Okay, and one major topic of this chapter is adjusted cash book. You must have read in your study material also. Why is it to be prepared and how is it to be prepared? Sir will explain you. And over to you, sir. Sir, you can start. I would request everyone to please be patient listener. Listen to him properly. He'll guide you. He'll help you out the how to solve the question. But yes, I know you must be having many queries, but I would request you to be patient listener. He'll give you time to ask you the queries. Sir will allocate the time. You please allocate the time for them. He'll be giving you 15 to 20 minutes, and your query will be addressed. So, but at the time when he is teaching, please be patient listener and allow him to make you understand the topic properly. Over to you, sir.
Yeah, thank you, Premada madam. Thank you for this opportunity. So I'm seeing a lot of students here, and we are starting on this chapter of bank reconciliation statement. Now, as madam said that this has to be reconciled. Reconciled means there's a conflict. What happens is, as you have all studied accounting, you prepare books, right? Books of accounts. Now, so there are two persons, A person and a B person. Now, A person prepares his own books of accounts and B person prepares his own books of accounts. So A person doesn't ask what transactions I have done with B, and B person doesn't ask what transactions I have with A. So the basis of some evidence what they have, they prepare their own books of accounts. But after that, both of the accounts may not match. So A transaction with B and B transaction with A, both will not match. And that time, we have to see where is the missing information. That is what simply is a reconciliation statement. And why we are talking about bank reconciliation, why it is one of the area of your chartered accountancy course, because this is one of the very important area when you become chartered accountants, when you become senior managers accountants, when you become even a chief financial officer. You know that the growth of this banking facilities and with that's how much the scams happened, this embezzlement of cash, so that it became an efficient and accurate internal control tool. So that's why everybody tells it, stresses it on bank reconciliation statement, and it has also become a very important chapter in the not only in chartered accountancy, every courses also they're including the bank reconciliation. Wherever the finance they're talking about the accounting means bank reconciliation statement. Now the question is that when we are preparing for a CA foundation course, and we know that it is a very important thing. First of all, is it if it is easy, then it is easy to prepare or not? So for that, we have to understand that actually bank reconciliation statement uses two things. There is no debit credit entries here. You have to use your intuition, judgment, common sense, and which you can use effectively. When I will go through the slides, you will know that you can use it effectively. And bank reconciliation is somebody, it is some work which is also given to a person who is a normal graduate also, even though is not belonging to commerce background, they are also given those tasks because the kind of, that judgment you have to apply as a common sense. But still then, a finance person needs to verify the bank statement, bank reconciliation statement to know that how accurately it has been matched. Now, the today's session is talking about what is this bank reconciliation statement and what can be the issues which makes me to find and prepare a bank reconciliation statement. Now, I am the CFO of a company, Chief Financial Officer of a company, and why should I need a bank reconciliation statement? Okay, so why my bank balance should be equal to that with the bank? And that is, I think, I don't know how many of you know the scams which happened. Many of the scams were through this bank balance were tampered with some big companies. So let us move on to the uh, slides to see on this. This is the link. You can get your link here. You can, when you click on this link, you'll get your study material here. Now, this is very obvious. Bank has its own statement. You in your cash book, you have your own statement, which the transactions which are there with the bank, and it is not matching. So for that reason, we are going for a bank reconciliation. Now, these are the topics which I will be covering. First is your understanding and estimating what is the reason for the difference. If there is a difference in the, suppose the bank statement and my company statement, there's a difference. What can be the reason of this difference? First, I have to estimate the reason. Is it really there is a reason behind it? Then I have to resolve this. Now, to resolve the difference, I have to resolve it in a systematic manner. And all these are there in your study material also. And I'll be covering in the slides also how you are finding the difference and how you are resolving it. And these two portions only create confusion in the mind of students during exams. They are not able to sometimes gauge what is that estimate, how to estimate that difference and how to resolve it. And that's once we clear the confusions, you see bank reconciliation is very easy. Once our confusion is cleared, then we can attack the questions and we can definitely do it completely. Just we have to use a practical bent of mind. That's all. This is where over that period of time, we'll be discussing about the purpose and utility. And the very important thing is methods of reconciliation. Now, when you're resolving the difference in a systematic manner, what are the different methods you're using? For that reason, we are focusing on the second class will be on the methods of reconciliation. But the very important thing is if you are understanding the reason and you're knowing that you can be able to resolve the difference in some manner, then you can easily go on for the method of reconciliation. So this is a typical bank passbook. So what happens is in a bank passbook, you have some date, transaction, you have a check number, you have some withdrawals, and you have some deposits. Okay. Any bank passbook, whether it is of an individual or of a company, you'll see always the statements will be there, some withdrawals, some deposits, some narrations, and finally some balances there. Right now, I'm not talking to you about this debit or credit balance. I am reserving it for the future to discuss on this. But this is what is a bank typical passbook is. You have a date, you have a particulars, there is some check number or some narration is there, and there is some withdrawals and some deposits. This is what a passbook talks about. Now, very important is this cash book. Now, I'm showing you a triple column cash book. Triple column cash book normally has, as you have, I think all of you have studied this cash book definitely. And what happens is there is a discount column for any discount given or allowed, okay, or received. Then there is cash for all cash transactions, and there is a third column called the bank column. So this bank column is what needs to be reconciled with the bank because this bank column talks about the transactions with the bank. So you can see this bank column here. So if you see in the debit side and in the credit side also, the similar bank columns are there. If you see here, there is a bank column. So what we can see now that this bank column, debit and credit, it needs to be seen in the what is the debit side of this bank column and what is the credit side of the bank column. You have voucher number, ledger file. You keep all evidence. So now company keeps all evidence. Till then it doesn't match. After keeping all the evidence, you have a voucher number, you have invoice with you, you have all bank transactions with you. Still then it is not matched. It is not reconciling. Why? So we have to find out what can be the possible reasons of not matching or not. What can be the possible reasons of differences and whether we are approaching it in the right direction or not. Here, if you see in the cash book, debit is all receipts, credit is all payments. Now, you all know cash is an asset. Okay. So one of the important asset is cash, and an increase in cash balance being an asset is always a debit. Okay. Any asset, when it increases, it is always a debit. The moment you have to decrease it, it is always a credit. So how you can increase the cash balance? If there are inflows. Inflows are the receipts. So when the receipts increases, definitely the debits will increase. But when you have a cash outflow, when there is payments, then the asset decreases, and that is where a credit. So that's why you have a debit side of the cash book and you have the credit side of the cash book. So debit side records all the receipts and credit side records all the payments. So this is where you have a triple column cash book. And if you see in your materials also, or anywhere in the site also, or in the cash book, we are talking about the bank column of the cash book. Whenever you're reconciling, the word is used. If you want, you can write it down also, you can note it down. The reconciliation, when it starts, how you're reconciling? You are reconciling with the bank column of the cash book with the passbook. Bank column of the cash book. Bank column means these are all these columns. If you see, this is the bank column, the last column in this debit and credit. The last column is the bank column. So you're reconciling the bank column of the cash book with the passbook. So you can see that's what it is. If in a bank, it is written bank column of the cash book. It's in the customer book. Bank statement is your passbook, because you ask to update your passbook. Company's passbook is updated, like individual passbook is updated. Then you bring the passbook and you try to see what can be the reason of difference, why there is a difference in the balances. And once you find, you try to resolve it. Okay. So what can be the basic reasons of difference? Now, if I have every evidence also, what can be the basic reason why they will not tally? Why they will not be tallied? What can be the basic reasons? So all the reasons, whatever reasons has happened in the practical day-to-day life of the accountant, all the reasons, this has been now categorized into different parts. Now, once you categorize, once you segregate, you can be knowing that, okay, this is this difference, this is this difference, this is different. Now, each of the difference is dealt in a different manner. So, okay, this difference, I have to deal in different manner. So, unless I categorize it, unless I make it into clusters, I will not be able to identify how to deal with this difference. Now, you can see here, one of the differences, difference in timings. Like you post a letter like that, difference timing. You give the information to bank when it reaches to bank. Bank gives you some information when it reaches you. The difference in timing. Now, when you can say that, you can tell me, sir, in this age of internet and digital age, how can there be a timing difference? But yes, in this digital age, internet age also, the timing difference remains. We will discuss on this more on this topic. And it's one of the crucial differences, the timing difference. The next is the transactions difference. Transactions, because some transactions bank does, you are not knowing, because you are not going every day to bank and asking every day transaction. It is done usually in the month end, and finally in the quarter end it is summarized. So you are not asking every day. Every day banks make some transactions, and summary of transactions banks compiled in a month. So whenever a person in a company, there's a dedicated person who goes to the bank and collects all this information and comes back. So the person usually comes back monthly. Of course, on a day-to-day basis, he's going, his job is to deposit the checks. Okay. And his job is to collect the checks. But at the end, he gets all the summary of the person who goes to the bank gets the summary of transactions, or at the end, the passbook, the bank statement, the passbook, they give the summary of transactions. So day-to-day basis, you cannot monitor every day. At the month, you get to it to compile it. So in that situation, when this situation arises, you have a difference due to transactions. Of course, if there's a transaction which happened immediately and it is known to you immediately, then there is not a problem. Similar to thing is the timing. Okay. The next difference is, as we all are human beings, there can be errors. So the next difference is dedicated to errors. So what happens? Errors can happen. Why errors can happen? Errors can be happening by, as a human being, by the accountant of the company while doing some entries. That's why we have also rectification of errors one chapter. Errors can be also done from the bank side. So these are the third part, which are very minor in nature, because the major differences come through the timings and transactions. So when you remember it, just remember it by the word triple TTE. So whenever a reason of difference, TTE. So whenever your bank book is not matching with the cash book, your passbook is not matching with the bank column of the cash book, just find out which T1, T2, and E. So either of these categories coming. So T1 difference, how to deal it, T2 difference, how to deal it, E difference, how to deal it. So first difference is that timing difference. Just a second. So we are talking about the timing difference. In this age of internet, why can there be a timing difference? What's the reason for this timing difference? Checks, one of the most popular method of transactions used by companies even to this date. Now, checks have a time lag. You deposit a check or issue a check. Okay. Now, first difference, if you see, when you issue a check, now I have issued a check. I'm an owner of a company, I've issued a check. I have two things can happen. I have not sent my men to present it. I have forgotten. I have some busy work, official work. Then I remembered that, okay, today, not today, tomorrow, I'll give this check and this person will go. Second thing can happen, I've given to the person. The person was busy in some other assignments or somewhere and it's not present. And it usually happens, it cannot happen in a real time. So whenever you are giving a check to somebody, it is issued and the time it is presented recording in the bank, it takes a time. So it's always treated as checks issued, but not presented. Checks issued means you have already issued a check. So when you have issued a check, company accountant doesn't make a delay, immediately writes it down to have a better internal control, to avoid an internal lapse that this is the check issue. That means this must be the outflow from the cash. Otherwise, cash balance is overstated. It is the outflow from the cash. So immediately it will write check issued. But in the sense, it is not gone to the bank. So till the bank realizes it, it has become checks issued, but not presented. Means you have not realized the checks. You can think of a proper word called realize. You can visualize that what realize means. It is checks are issued, but not presented. Second thing, checks have been deposited. Customers have deposited the checks. Customers have given you checks. You have deposited the check, but bank has not credited. You have got a check. Yes, I think there is a question here. Can you speak up, Satyajit Pradhan? Gurvinder? Okay. Are you able to speak? So I know the doubts will come now, but let us wait till the time being. Okay. I know that there are doubts. We will talk to this after the session. Okay. So I know there are a lot of doubts because, when you talk of checks, how you will deal with this. Okay. For the time being, I'm telling you, all of you, that whenever the checks is, you can post your questions there. I'll answer it. But right now, you can understand that there is always, you cannot avoid a check that today you gave a check, it will be realized today itself. Checks. And moreover, what they do is, sometimes your bank account is one thing, you give check of different account. So checks are issued, but not presented. Customer has given you a check also. So you have got the check, you have deposited it, bank has not credited it. Sometimes what happens, customers give, and how you get the checks, from customers. Marketing persons, normally, sales persons, they ask customers that this is the order we have done, give us a check. Now, when the moment they get a check, they go to the finance department and they say that this is the check we have received from the customer. You see, customer has paid us. There's no more, you don't think it as a bad debt. So marketing persons take pride that yes, our customer is not a bad debt customer. So when you give that check, moment to the accounts person, now it's given to the person who goes to the bank. Now it deposits that check in the bank, but it is not credited. It cannot be credited in the same day. You cannot expect a check to be credited in the real-time basis. Similar is the check issued. So because banks, check department is different way it functions. You cannot take every check and make it in a real-time basis. So that's why checks always there is with checks there's a time lag, and this timing difference is due to the mostly from the company side. The information is with the company, not with the bank. Try to understand. I am repeating. The timing difference is the information is with the company. I got a check. I entered it as a receipt. I issued a check. I entered it as a payment. So check issued is a payment. it is a credit entry for a company and it will reduce the cash balance. Checks deposited is inflow. It is a debit entry for the company cash book in the bank column and the cash book balance will increase. So check deposited increases the cash book balance. Check issued decreases the cash book balance. I will be discussing these things in detail also. Just now I'm giving the just summary of what are the different differences. Then I'm also dealing with the differences in detail. I'm just not telling this and skipping it. I'll be also explaining in detail. I think then after that, when we have our doubts, we can clear it and we can know where we are in the whether your doubts have been solved or not. Because this timing also I'll be explaining it in detail. So this is what I said. When you issue a check and the date is presented, there is a time lag. Okay. So normally, when the check is issued, it is a credit for the company. So there is a time lag. So there is a withdrawal, right? And the cash book balance is always less than the passbook at that point of time, till it is presented. So what is happening is, when you're issuing it, it is reflected in the cash book. Only when it is presented, it is reflected in the passbook. That's why it is said, but not presented. We have to understand that wording, but not presented. So there is a decrease in cash balance. When there is a check issued, always the cash balance decreases. So these are all very vital concepts to understand whenever we are dealing with the problems of the bank reconciliation. These are very, very vital because the questions comes normally from these timing differences. In the first 2-3 points, always be able to discussing about the timing differences. Yeah, here you see here, check is deposited and when it is credited, there is a time lag. At that moment, cash book is reflected, but your passbook is reflected only when it is credited. So in that point of time, cash book is more than the passbook. So you see the balance when you are depositing, there is an increase in cash balance. So this is how the transactions which is happening, and this time difference creates a difference in the balance of both the books. When it is deposited, it is reflected, but only when it is credited. So normally the dates differ. Suppose you are reconciling in the month end, the dates will differ. So definitely, or you are reconciling it in a quarterly basis due to your audit purpose, definitely it will differ. The checks which you have been sent on the 30th April, suppose your audit is on April 1st, so 31st March, whatever you are sending, 30 or 31st March, it may not be reflecting because it may be reflecting in on April 5, April 6, whatever dates. So normally these differences will remain. So timing differences are there to stay, and that will always create a difference in the bank book, I mean the passbook and the bank column of the cash book. Definitely these two differences will be remaining because of the check deposited and check issued. Now coming back to transaction differences, if you see here, bank transactions, companies have some deposits, companies invest in companies, different shares of companies, they get some interest from those deposits and they get dividends also. What happens is, bank receives on a particular date, company doesn't know it. Bank receives on a particular date, company doesn't know it. Similarly, some payments, what can be payments? Interest which is charged on loans, definitely they have a particular due date and they do it. So in that sense, whatever date they have done it, they have not passed that information normally. And it normally happens. We are all human beings, so definitely there is a time lag in passing the information. And this is where the differences can arise. Similarly, we do not know for any documents what is the bank charges, okay, or when that bank debits those charges, when the bank deducts those charges. So when the bank deducts such type of charges, such type of bank charges which bank calculates and deducts, we do not know what date it will deduct or what time. Then we ask whether it is justified. We check it with our bank contracts and we find yes, it is justified. Then we have to record it. Otherwise, we ask bank to reverse those transactions. So normally bank charges are one of the very common transactions which creates a difference. Normally, bank transactions are very much, if you seen any questions, you can see that bank charges are very common in any of the questions in CA Foundation. You see somehow there is bank charges will be included, even in revision questions also, bank charges are also included. So interest which is charged on loans and bank charges for the services, these are one of the two areas where you will have the differences. Yeah, Satyajit Pradhan, you have a query. I think if you have posted it on the, if there is a thumbs up icon, you can say it if you have posted it on that website where you have to post your questions. Okay, so that I'll be able to see what are those questions is. I think the chat box is disabled, so I'll be able to see the questions, and then I'll surely answer it, all of these questions. So we can know that where you have doubts there. You can see here, I'm just saying interest or dividend is received means it is reflected in the passbook. When it is acknowledged, it is reflected in the cash book. Acknowledged is when you are getting to know, when the bank sends advice, a bank says receipt note. Yes, this is your interest you received or dividend you received. Our bank informs you by some communications and you by some communication channel and you get to know, then it is reflected. To till that time, the passbook is always greater than the cash book. So what happens here? Passbook balance always increases in such type of transactions. So when you are getting interest or dividend, passbook balance increases. See, we have to apply our we have to increase our common sense in a more way to think this practical application. What can happen to my passbook and what can happen to my bank column of the cash book with such type of situations. So every such situation is an event, and such an event, what it does to the different books. So this is what I have visualized for you. Now you see here, passbook is reflected when interest paid. Same thing, cash book, it is reflected later on, and you are seeing a decrease in the passbook balance. See, the passbook balance is decreasing when there is interest paid or bank charges. So these are all events. We just have to think what will this event do to the particular book. Then how will we reconcile the difference? This subject, actually, it is there in your, not this session, final session, but I have included a brief summary of this subject, very brief summary just to talk of. Any doubt, more doubt on this subject will be dealt with, this topic will be dealt with a session when we are talking bill of exchange. But why I had to include it? Because this is one of the area where they are putting questions and testing the students' knowledge somehow. It's one of the area, such type of area. Why they are testing? Because this is one of the financial instrument, which creates a difference which needs to be reconciled. And in practical sense also, a lot of companies, they deal with bill of exchange transactions with banks. And that's the reason that bank reconciliation has to be done with the bank column and the passbook, because of the differences arise due to bill of exchange transactions. So what can be the differences? So I will just keep a short on this bill of exchange. I'll not talk much about this. Only 1 or 2 slides is dedicated to this bill of exchange transactions. The objective is to just to tell that why that creates a difference. That's all. More on bill of exchange transactions we'll discuss on the bill of exchange subject when we'll be studying. So bill of exchange, you know that there is a bill receivable where you are collecting from a customer, and there is bills payable which are paid today. You have to pay to the supplier. So bill receivable means you have to receive. It's like account receivable, account payable. Account is replaced by bill receivable and bill payable. Okay. So here what happens? What is this particularly bill of exchange? Simply just a written document of trust. For right now, you understand that whenever you are somebody is selling goods and somebody is buying goods, somebody is paying the money for the goods and somebody is giving the goods. So there has to be trust from both the parties. And for that, the trust is form of a bill of exchange, which is a written document and which has to be validated by the banks. Now, what happens is here that for a supplier part, it is a bills payable and it has to pay it to the party B. Where party A has to give it to the seller, party B, this document, so it is bill payable. So what is it? It's for a supplier, it is bill payable. Now, when this person is waiting, the seller, from the customer to get the bill, and it is expecting from the customer, it is known as bill receivable. So this is what is the complete transaction from the supplier side. You can just understand instead of accounts payable and accounts receivable, it is bill payable, bill receivable. Functionality is the same, only here bill of exchange is the mode of transactions. Okay. So whenever the bills are collected, when you get the money, it is first reflected in the passbook. Now, why I say that what happens in this type of scenario, why it causes a difference? In a bill receivable, whenever there is a collection, then only it is reflected in the passbook. But the thing is, when the bills are collected, it is only known to the bank, not to the company. Now, as I said, when the transaction moves through bank, it is known to banks only. So that's why your cash book reflection is coming later. So there is an increase in passbook balance. Similar things happens in bills payable. Whenever there is a payment, the passbook reflects it. Acknowledgement is later. So passbook is always less than the cash book. So there is a decrease in passbook balance. So I have shown this through steps to show why this is happening. Now, why banks come into bill of actions? First of all, we just understand in one line, because when banks are involved, the trust level increases. So what happens? One bank, another bank, two banks are involved. Now, in this bill of actions, which is gone, that is going for discounting also, it is done. What the discounting is? When you deliver the goods and services, buyer will acknowledge the invoice, and the seller approaches the financial institution or bank, says that this is the bill, and supplier is acknowledged. Supplier will pay me money after 30 days, but I need money urgently for my liquidity, for my financial position to be secure. So you can deduct some charges or discounting charges, whatever your contract says. Kindly take this bill as a guarantee and give me the money immediately. And what happens? It's like it's a form of a check, but here you get the money instantly because the supplier has acknowledged the buyer. The supplier is given the money, goods, and the buyer has acknowledged the invoice. Now, when the buyer has acknowledged the invoice, bank gets happy that yes, this is a secure transaction, and I can pay, and I can later on collect it from the buyer. I can later on collect it from buyer. Right now, what I will do, since I pay early before 30 days, I will reduce the amount and I will take some charges. Yeah, so we will discuss on this. No problem. So what happens? The bill is discounted when received from the company, and the bill is dishonored when it is customer does not pay. Right? Now you got, the company got money, bill is discounted, the company got money. But at the same time, what happens is, a time arises when this bill is getting dishonored, because at the time when the customer doesn't pay, then the bank doesn't honor the bill. So there is a situation arises of bill dishonor. So these are the two bill discounting transactions which causes a difference, because these are the things which is known to the bank first, company later, because bank does these transactions. So that's why I stressed on this topic for a small period duration, because I know questions will be asking. The questions are normally asking on these points. They have used this bill discounting everywhere, and they have applied it in all these CA foundation papers. I've seen this. So when you are discounting, you see, when you're discounting that, you're giving the money first to the company. So first of all, it is known to the passbook. Then later on, it is reflected in the cash book. Then in a dishonor of bill, the passbook is reflected, the cash book is reflected later on, because, you know, when the bill is dishonored, the company doesn't know that the bill has been dishonored. Simply like check dishonor, company doesn't know it. Later on, bank sends advice, seeing the written advice, you can see it. So there is a decrease in the bank book balance. Then this is very minor thing, it happens, but anyway, it creates a confusion also. They will, the questions will be such that the student's knowledge is tested through these means. One is a wrong debit or credit, and another is undercasting or overcasting. So wrong debit and credit can be there. Okay, you are a human being. Undercasting, overcasting, totaling can be wrong. I think if you have studied rectification of errors, totaling can be also wrong. So debit credit can be wrong, and totaling can also be wrong. So what happens? You see that when there's a wrong debit, it's a cash, you know, bank book, there is increase in asset, and when there's a wrong credit, there is a decrease in the asset. So this is overstated and understated. Similarly, this is overcasting, the balance increases, undercasting, the balance decreases. So there is an increase in asset due to overcasting, and due to undercasting, there's a decrease in asset. So we have to carefully see how these situations are dealt with in the reconciliation. Now, before going to this, this is what I told you the reasons. Now, before going to this, if you see here, before going to reconciliation, you have to understand both the books. Books of the company. You are just like you are accountant, you are judging both the books and you are reconciling it. So you have to think in the terms of first company and from the bank, both sides, because both the books will come, both have their own languages. One language is different of company, another language is different of bank. You have to be like a translator. You have to reconcile it. So what you have to see here is, first you see For a bank, the business enterprise is like a creditor, a trade payable, right? It's like a creditor. For a bank, you're like a vendor because you're one of its customer or something. Now, for a bank, business enterprise, you are a debtor, a trade receivable for a bank. Now, when I am talking of this difference, why I'm talking is the account, savings account, or the current account, or whatever money you're depositing in the bank, one day you will take it from them. So for that condition, it is a liability. For that condition, it is a liability. Okay. So for the bank, you are becoming a liable creditor or trade payable. Now, whatever loans bank is giving you, that time bank has to get that loan. So that's a debtor or a trade receivable. So why these two mirror images? Just understand company or bank are two mirror images, and let us see how the mirror images happen. If you see here, if there is a wrong debit or credit in passbook, when there is a wrong credit, there is a increase in the liability, and when there is a wrong debit, there is a decrease in liability. Same thing, overcasting, increase in liability. Now you can see they're not talking of assets, they're talking about liability. The bank company is a liability. So just now I will make this point clear all the confusion with a simple diagram here, just to see here. Debit balance with cash book, if it is there, means passbook, it is always a credit balance. We'll forget all confusion. Just focus on this diagram. It will help you solve all your bank reconciliation problems. This particular diagram will help you solve all your bank reconciliation problems. Debit balance with cash book is always a credit balance with passbook. So salary credited, money credited to your account is written like this because it is credit balance with the passbook. For you, it is a debit balance. You got money inflow, right? So, Harmanpreet, I will, okay, if you have posted your question, it is very well. We will discuss on that question. Credit balance with cash book is debit balance with passbook. Now, interest debited. Bank says interest debited. Message comes from bank, interest debited. Yeah, Mohammed said, definitely, if you have posted a question, I will surely answer it. Interest debited. Okay. Bank says, but actually, for you, it is outflow of cash. Some loans company has taken and you are taking, interest is charged on that. So interest debited is actually interest charged on you. So it's a credit balance with the cash book. Money credited. Okay. Means it actually you are getting an inflow. So this language of banks, these two, are, just have to understand this mirror image. These two languages are different. Debit of cash book is credit, passbook, credit of cash book is debit of passbook. Simple this mirror image when you understand, then we are able to solve the reconciliation problems quickly. I am showing you a typical cash book. So the major part is now when we see that we have to how to deal with these problems, practically how they've been solved, practically how these problems are solved, right? In companies, what they do it. First of all, a passbook comes to the bank. From the bank, you get a cash passbook. Somebody, either the bank sends through its own person or somebody who goes to bank gets the passbook and brings it to the accountant and shows it that these are the withdrawals and these are the deposits. We have it with us. And seeing this, you can see the balances, withdrawals and deposits are there. Then what we have to do is now the thing is we have to reconcile it. So with whom we have to reconcile? We have to reconcile with the bank column of the cash book. Now you see how you have prepared the cash book. Simple, you have date, particular amount, and in the left-hand side, which is the debit side, you have put all the inflows, and in the right-hand side, you have put all the outflows. Then finally, after all this, you get a balance. Of course, the chat is disabled, otherwise I would have asked what is the balance in the cash book, okay, and what is the balance in the passbook. So you can see here, I think many of you must be able to visualize the passbook balance here. The passbook balance, if you see in the last, it is showing the balance here. It is 2,43,000. This is the balance. That's what's underlined. This is the balance which has been shown in the passbook. If you go to the cash book, it is showing 2,37,000. Now, what's happening is the passbook balance is 2,43,000, the cash book balance is 2,37,000. That means there is a mismatch. It should be, if there is no need of reconciliation, if these transactions matches, then the balance will match. That means somewhere one of the line items, these are all known as line items, somewhere one of the line items has been missed or has to be dealt with or has to be checked with or has to be rectified, whatever. So this is how companies, when they bring the passbook, they check with the cash book. And then now how companies actually start the reconciliation process. Actually, practically how they do, let us see it. That way it will help you to answer the questions. When you got the real questions in the exam, it will help you to answer such questions. So what happens now? You have a passbook balance, right? And you have a cash book balance. Now, passbook balance is 2,43,000, cash book balance is 2,37,000. So you can go either way. What we can do, sometimes, many times companies know that usually bank statements, they tend to be authentic. Cash statements also tend to be authentic, but needs to be verifiable also. So what happens is, they will think that let us go by the bank, because if we tell something to bank to change it, before that, you have to check that whether bank has done everything correctly or not. And bank statement is normally known as the authentic statement. Yeah, Nisha Vanwal, definitely. If you posted your question, I will definitely look into it. So what happens is, now you see, you have to go from the passbook balance and check what transactions are there or not there in the cash book, so that are you getting 2,37,000? If you are making some adjustments in the passbook, you're making some reconciliation entries, taking some entries, checking both the entries, where this passbook balance is 2,43,000. What would have happened if I made the passbook balance 2,33,000? See, 2,43,000 is there. What would not have been, or what would have been, which would have made the passbook balance similar to the cash book? That is where you find the reason of difference. You find the reason of difference. So 2,43,000, 2,37,000. Now company has to find the differences. The company accountants, now they start looking for the differences. So in the really company, they look through this type of situations they deal with, and how they look into it, let us see. So first what they do is they go to the cash book site. Okay, first they go to the cash book site, and what they see, and they see, first of all, let us say that checks are deposited but not credited. Checks are deposited but not credited. You can see, whenever you are going to the debit side of the cash book, if you see here, if you are going to the debit side of the cash book, what does the debit side of the cash book show? It shows all the inflows, right? But for passbook, the mirror image, you will not go to the debit side. If you are going to the debit side of the cash book, you have to go to the credit side of the passbook. So you will first match, if your left hand side debit side, to the right hand side of passbook. Left hand side of cash book, right hand side of passbook. Left and right. So now these are all, you are seeing where the deposits are matching or not with the debit side. So first we'll see John's cash. First we'll see cash 4 lakh. It's by cash 4 lakh. Yes, it's matching. This is how companies start taking out the entries. Then Johnson and Co 35,000. Johnson's and Co 35,000. Babu and Co 76,000. Babu and Co 76,000. So this is they started taking on one by one. Then cash to cash 30,000, by cash 30,000. Share and Bros 43,000. JRI and Bros 43,000. What is not matching now? We are not finding these two persons here. So in this class, we are not finding these two persons. M. Mohan and Co. N. Nandi and Sons. Both these amounts. What does that mean? it means that these are the check deposited but not credited. These are coming under checks deposited but not credited. So this is how companies first find out their transactions in different way. So this is one area, the line item they identified that this is missing in the bank means it is a check deposit case but not credited case. That means it is coming in the timing difference, and under the timing difference, the event is check deposited but not credited. Which are the checks? One check is of M. Mohan and Co. and another is N. Nandi and Sons. Now what you do is you go to the credit side. What are the payments you have made? Okay. And credit side of the cash book will be tallied with debit side of the passbook. So I think Satyajit Pradhan has a lot of queries. I will be happy to answer it once I complete this session. I think by 12:30, if we are on, then by 12:30 we can discuss on this question and answer sessions. Okay. Even Harmanpreet Kaur has also one doubt. So we'll go to it. So what we are doing now is all the outflows of the cash book, which is on the credit side, we are matching the debit side of the passbook. So first we went to the furniture. Furniture, dealers, 60,000. Here we got, yes, we got the dealers 60,000. Roy and James, 1 lakh. Roy and James, we got 1 lakh. Das and Co, 1,25,000. Das and Co, 1,25,000. So the order may be different, but you are getting those items. The sequencing may be different because they prepare in their own way, you prepare in your own way. Sequence will be different. So we have to find out. That's how companies do. They start doing it. By cash, some 50,000 is there. Then to cash, 50,000 is there. What is not there is by Babu and Co, 78,000. But you can see here Babu and Co, 76,000 is there. But that we have already tallied it that time. Same Babu and Co, same person can be both supplier, customer. And something is not there is K. Nagpal and Co. These two we are not able to get it. These two we are not able to get it. So now we got that these are checks issued but not presented. So under the timing category, checks issued but not presented. So what is the passbook balance, existing balance? Existing balance is 2,43,000. Existing balance is 2,43,000. Now, which one we will take now? We will add, if you can, I have just taken the screenshot, this N. Mohan and Co. and N. Nandi and Sons, 105,000 and 34,000. Okay. So these are the checks which have been deposited. Now, why I am adding it here? Why I am adding it here? Because I am trying to go from passbook to the cash book. So I have to imagine what information is there with cash book, which is not there with passbook. So this information was not there with the passbook. This is there with the cash book. And it is deposited. It is deposited means the passbook balance must increase. The passbook balance, because it's deposited means someday the passbook will credit it. That means its balance must increase. So here it is added up. Okay. Now, what you get is, so this is on the check deposit side, you got total 3,82,000. That means the balance, which was 2,43,000, now became 3,82,000 because you have added the checks. Because you see your cash book balance, that checks are added. So bank should know that information. This is the information bank must have. So you added it. That is for the bank then to check and see whether I have received those checks or not. Then you find out whether I have received or not. Now, with this 3,82,000, what can happen is you have got certain checks which have issued, which bank has not recorded. So K. Nagpal and Co. and B. Babu and Co. These are the two checks which has been issued but not presented. So that will actually decrease your passbook balance, because in a passbook they have not taken those. That's why the passbook balance was not showing those amounts. They were not deducting those amounts. So that means it should be there because it is there in the cash book. should be there. So you are now having the balance as 2,31,000. So whenever you are the cash book balance, you are taking those checks because those checks are known to these checks. You are accounting it. These checks you are not ignoring it. You are entering the transactions because these are the checks which has happened in the cash book but not known to the passbook. So now you are making the passbook realize that yes, these are the entries which you are not knowing, and you are giving those entries, right? You are giving those. So Harmanpreet, I will definitely get back to your query. So this is the typical passbook balance. And if you see here, after the checks, something we have not considered now, there are some transactions of the banks. There are some transactions to the banks. How we can know the transactions? When the company passbook comes, it is written, just a second. So how we know that these are the bank transactions? Because you can see on the month end, 31st, the dates are given, January 31st, 2022, premium is paid as per standing instructions, bank charges is this much, interest collected on government securities is this much. These are all the transactions. Out of that, which transactions has increased the passbook balance, but cash book doesn't know it? One transaction has happened, one happy news, one good news has happened, which passbook knows it, cash book doesn't know it. So what is that good news? Interest which is collected on government securities. Company has invested in government securities and they have received one interest of 20,000. So this is known to bank, not known to company. So this is one event which has to be recorded by whom? By whom? By the cash book. It has to be recorded by the cash book because this is known to bank but not known to cash book. So cash book must also take that into account and check it. So, but what happens is your existing balance is 2,31,000 and you are deducting the interest on government securities. So you are coming to the passbook. Now, minus this interest on government securities, the existing balance, you have to see here. The passbook balance is 2,31,000 and this interest in government securities is minus. Why? Because the cash book doesn't know it. The company doesn't know it. And you are going to the company's position where it doesn't know. So company must add it. The cash book must add it. But the problem is this good news is not known to the company. So for that reason, what you're doing is this receipt, you are deducting it and you're arriving at 2,11,000 because this is an inflow, but not known to the company. And we are trying to see after this, what's the balance coming? Because we have not entered this transaction. Company has not entered it. Bank has entered it. And so we deducted this. Now from this existing balance, we deduct the interest on government securities. Then one good news came. Two bad news are there. Premium paid as per standing instructions, 25,000. Bank charges, 1,000. These two entries done by bank deducted, but company doesn't know it. The company must deduct it. That's later part, but company must deduct it, but doesn't know it about it. So what is not known to the company also has to be arrived at similar things. So you have to add back those insurance premium and bank charges because company doesn't know it. So you have to add back because you're arriving at the cashback balance because you're trying to see how the how the passbook should look like if it aligns itself to the cash book, if it acts like the cash book. So passbook has to act like the cash book and that's how you are getting the reconciliation. So you are getting now the total as overall total 2,37,000. So what is the cash book balance? The cash book balance is 2,37,000. Now, by going this way method, what we found out is the balances are now tallying, means these are the reasons of differences. So companies what to do is they first find out the reason for differences, then the second deal it. So this is how they found out. You see, whatever was done earlier by the bank has to be replaced back. And whatever was done by the company has to be given to bank. That's why the bank has to come like a cash book. This is how they got a balance which matched. Now what happened? Cash book balance is 2,37,000. Passbook balance is 2,43,000. You have to arrive from passbook to cash book. What they did is checks which are deposited, passbook balance 3,80,000 due to checks deposited. So what happened? They added up the checks deposited, then they taken the checks issued, subtracted it, then bank transactions inflow that has been subtracted. So as you can see, when I'm doing it, just trying to show you one thing. Whenever you are arriving at the passbook balance 2,43,2, it became 3,82,000. Why it became 3,82,000? From 2,43,000, it became 3,82,000 because you added the checks deposited, because you said that no, the passbook should behave like the cash book, it should take the checks deposited, because you're reconciling the passbook to arrive at the cash book. So passbook should behave like cash book. Now what happens? Whenever the check issued, you did from 3,82,000, the balance again decreased to 2,31,000. That means checks issued should be taken to the passbook. Passbook should behave like the cash book. So passbook should behave like the cash book. Now what you see? Bank transactions inflow. Bank has received money, but the balance decreases. It has been deducted because cash book doesn't know it. So you have to behave like cash book. You have to subtract that amount. You have to take out that amount. You have to don't show it as inflow, because we want to know that whether you and me are same or not. So that's how we are trying to reconcile. Then passbook balance had an increase to 2,37,000. What happened? There is a bank outflow. Now outflow is increasing the balance because that outflow is adding, because cash book doesn't know about it. So we have to behave like the cash book. Now finally, passbook is behaving like cash book, and passbook and cash book balance are matching 2,37,000. So this is the typical way companies try to arrive at cash book balance from the passbook balance. Okay. So how it is happening? You can see the transactions. Whenever the checks are deposited, the passbook balance increases. Checks are issued, the passbook balance decreases. So if you can take a photo of it, a snapshot of it, and keep it, it will be very handy for exam. These questions, whenever they're given, if you have remembered it in your mind, if you have understood the logic, if you understood the logic and you have remembered this will solve your reconciliation problems. Checks deposited. Passbook balance, when you're trying to go into cash book balance, it will increase. Checks issued will decrease the passbook balance, because you are behaving like the cash book. Now, whatever inflow is there, you should always deduct it from the passbook, and whatever transactions outflow is there, you increase. That means here you are just doing the reverse. Here you are just doing the reverse. Any inflow you are decreasing, outflow you are increasing. So if we go in this method, definitely, if you remember this 4 lines, definitely we can solve the reconciliation problems. We can understand it better. The next part is, it is showing the some following transactions. It is showing some Mr. A's cash book. We are locating some errors. Sometimes what happens, this is how companies also deal with it. Sometimes what happens is everything is there, but still there is an error. Error is done, human error can happen. So what happens is companies also locate the errors also. Can there be error also? That's the reason the bank balance and cash balance are not matching. So if you see the bank column of the cash book, you can see how very systematically they have written date, particular amount, date, particular amount, 60,000, 80,000, 10,000. So all these amounts they have given, and they have given a balance. Now the balance is here 1,28,000. One thing what happened here is, if the chat box is disabled, so what you can see is what is happening. What is the error here? The error is, if you see the balances, March 31st, the balance was 1 lakh. Okay. So that balance should have come to the debit side. What happened is, wrongly it has been going to the credit side on April 1, and that the amount has become, by balance brought down 10,000. So asset is now brought to the credit side, and the balance is also less 10,000. So in that case, what we are doing? Now in the passbook, we have the passbook. And in the passbook, when we get the passbook, what we see here is the balance brought down is there. 1 lakh is there in April 1. So the error is made by the cash book here. Passbook is correct, 1 lakh. Then you have different accounts. We have to find out how to errors is there. Now first we go to the debit side. Now we have the cash book and passbook. We get to the debit side, and we also go to the deposit side. So now we have to find out Debit side, you see here, two inflows are there. Cash 80,000, wine is 60,000. Same thing is happening here also. So no problem totally. It's matching. Credit side, you see this is happening here. And here, there are some withdrawals. Okay. And the withdrawal is somebody called Vandy Limited, 90,000. But is it should be there in the cash book? Is it really should be there in the cash book? First of all, we look at it one error. This is March 31st, April 1. Second one, how can this April 13 can be error? Is it a really error? But what we see here is within April 1 to April 29, no error entry is there. In April 1 to April 29, no entry is there. So what happens is this entry has been missed. This entry has been omitted because you see on April 1 to 29 in a sequence, they're not finding the Vandy Limited transactions. So April 1, April 13, check is issued to Vandy, and which is not there in April 1 to April 29, we're not finding it. Now, what you're doing is you have to adjust this closing balance. You have to adjust the closing balance. What you have to do here is buy balance. This is 1,28,000. Okay. Now this 31st balance is from all the previous transactions. You have got this 31st. So what to do is you correct opening balance. You add it. You add the correct opening balance because from the opening balance you derived at the closing balance, and opening balance should be on the debit side. So you add it. Then you add also the incorrect opening balance because it is on the credit side. So plus minus gets cancelled, debit credit gets cancelled. So you add the incorrect opening balance. I'm showing it again slowly because you'll be able to understand. Balance 1,28,000. You are taking this existing balance. You are adding 1 lakh. Correct opening balance, which should go to the debit side. It should be added up. Debit side, that's why you're adding it. Then we're adding the incorrect opening balance also, because if you don't add it, this credit side, it will remain. This 10,000 in the credit side will remain, which is an error actually. So we are adding the incorrect opening balance, which is on credit side. Then we are subtracting the checks issued but not recorded. 90,000, which you have not recorded. And you are getting closing balance as per cash book is 1,48,000. Now you are getting the adjusted cash book. This is called the adjusted cash book. You have adjusted the entries because some errors were there, some were omitted, and you adjusted accordingly. And then what you found is closing balance as per cash book. When you go now, balance as per passbook is 3,20,000. Checks which are omitted in the books is 90,000, but the checks has been issued has been 90,000. So checks has already been issued 90,000, but it is not there in the books 90,000. So you are getting closing balance as per passbook is 1,48,000. So what happens is the checks were omitted. 90,000 has gone, but you have also issued the checks of 90,000. So you deduct it and then you arrive at the closing balance as per passbook. Now this is where you are getting the accurate balance. So what you did is, if we summarize it, you corrected the opening balance 1 lakh, incorrect balance 10,000, and you arrived at check issued but not recorded. You deducted and you got 1,48,000. So this is the adjusted cash book. You adjusted the cash book accordingly. Here what happened is balance as per passbook is there. Checks which are omitted 90,000, but checks which are issued and not recorded, that is also 90,000, because the same entry 90,000, you have issued the checks, you have omitted in the records, and you get 1,48,000. So this, when you adjust it, now you are reconciling it. This is the reconciled balance. 1,48,000 is the reconciled balance. So when I think of, this is some multiple choice question to just, yeah, Satish Pradhan, definitely we will finish up within a, I think within 12:30, we'll be able to finish up, and we can have a revision also. And First of all, I'll attend those questions of Satyajit and whoever have raised hands. I think they have put those questions on that website. So first of all, if you see here, multiple choice question, bank balance as per cash book is less than passbook. What can be the conditions? Three are given. Check issued but not presented for payment. Check deposited with bank but not cleared. Interest and expense charged by bank. Now balance as per cash book becomes less than passbook. When cash book is there, passbook is there. When there is checks issued but not presented. So that time what happens? Passbook doesn't know about your checks issued, but cash book knows about it. So at that time, cash book balance reduces, passbook balance remains intact. Passbook doesn't know about it. So cash book balance decreases and passbook balance increases. So checks issued but not presented for payment, check deposited with bank but not cleared, and these all are not. So only the check issued but not presented for payment is the right option. Here, bank balance as per cash book is more than the passbook. What can be the reason? Just see here which transaction is not known to the cash book, which increases the bank balance as per the cash book. Which transaction is not known to the cash book, but it is known to the passbook, which reduces the balance. Now, there are three different transactions. All of them are known to the bank, not known to the cash book. But which transaction reduces the cash balance? I think this is a very pretty easy question. Your bill discounted with bank, you get money. But when there is a dishonor, that money goes away, known only to passbook. So in that case, dishonor of a bill discounted with bank reduces the passbook balance, but your bank balance in the cash book remains higher. So in that point of time, your bank balance becomes cash book is more than the passbook. So this is a very typical question. I have just used this multiple choice question to just have Richa Kumari. I will definitely look into it. These questions. So this is a question. What is done is just you have to test how you are able to understand what happens to the balance. No, this question is able to test your quantitative ability of how are you able to judge and calculate, estimate it. Now, what happens is cash book is and passbook both at 10,000, but bank has given rupees 1 allowed. Allowed means there is you are getting money, interest on savings account to customer. You are getting money allowed. So what should be the cash book balance? The cash book is 10,000, passbook is 10,000. Passbook gets 1,000, so 11,000 because interest is credited. So cash book balance remains the same because it is not known to the cash book. It is not known to the cash book. So normally what happens students do is, with such type of questions are asked, we are in a hurry and immediately we try to rectify the cash book. So why I am discussing these questions is, why I'm focusing on these questions, because these are the questions which, if you are able to understand properly, you will not be getting misled and will write the correct answer. So questions are, it's a process of testing your intelligence. So questions will always try to confuse you so that your intelligence is tested, your mental is tested. Now you see here that the moment I have said like this, the moment you see cash book balance, it's 11,000 written, you quickly think of it as 11,000. But understand that bank has allowed, transaction is known to bank. So what is the cash book balance? Cash book doesn't know about it. So 11,000 is the passbook balance. So this is not known to cash book. So passbook balance may have increased to 11,000. Cash book balance remains to 10,000. So passbook balance is more than the cash book balance. So 11,000 is remaining, right? Now balance as per cash book and passbook are 15,000. Bank has collected dividend of 2,000. What should be the passbook balance? Now both are 15,000. Bank has collected dividend. This answer you all know, because any information known to passbook will always reflect in the passbook. This information is known to passbook, reflects in the passbook. Had it been check issued but not presented, no, passbook is not have taken this. So you can see here the answer is 17,000. Balance as per cash book passbook is 15,000. Bank has collected dividend of 2,000. Passbook balance is 15,000 plus 2,000, 17,000. So bank has got the information. So it is 17,000. So this is a quite critically looking, but a good question. Seems to make you confused, but we have to understand it in the right manner. First of all, as I said, what is asked here question and what is given? Given is both cash book and passbook balances. Given is that X has deposited a check of 3,000, okay, which is dishonored non-payment, and bank has charged rupees 100. Okay. Now, because this is a dishonor case, so what happens is when X has deposited check, it was not known to passbook. It started giving it, realizing it, crediting, but since dishonor so gone, so 3,000 plus minus cancelled. And what happens is bank rather charges rupees 100. So which is not known to the company cash book. So cash book is 20,000 plus 3,000. Cash book is happy with 3,000. So dishonor charges, but rather cash book is happy with 23,000. Doesn't know that. Rather, forget about 3,000. 100 rupees is dishonor charges and balance is reduced to 19,900. So this is the situation where your passbook will not match with cash book and you think that I have deposited the check. What has happened? Customer didn't have funds. So lack of funds and there was dishonor charges and it became 19,900. So this is the passbook balance is 19,900. Balance as per cash book is 2,37,000. Checks issued but not presented is 1,51,000. What must be the passbook balance? Now when you are trying to reconcile it, okay, balance you are arriving from passbook to cash book. So balance as per cash book is 2,37,000. Checks issued but not presented. So what should be the balance? So this information is not known to passbook. So passbook will add this and it will become 3,88,000. So we have to understand what information is not known to passbook and what information is not known to passbook. Normally, all the checks information is not known to passbook. All the bank transactions is not known to cashbook. Still then there are some questions that are very tricky where you have to understand which one information. The point in solving such problems is first you have to find where the information is there, where the information is not there. And then how you deal with this information or this event. Okay. So passbook, what happens is it is 2,37,000 and 1,51,000 added because not known. So passbook balance because you are trying now. Now the question is different. You are trying now to arrive from passbook to cashbook. That time I was asking what is the passbook balance. Now trying to arrive from the passbook to cashbook means I have to behave like the cashbook. So you added, and that's why the cashbook, the checks issued not presented. So 1,51,000. Now what happens is here the passbook is actually 2,37,000 plus this 1,51,000 because passbook doesn't know this information. Passbook, how will passbook know? So cash book 2,37,000 and this 1,51,000 will be added up and it will become 3,88,000. So when you're reconciling it, then you're thinking of this check issue and not presented. So the information is not known to passbook should be added back in case of checks. So here you can see here that passbook balance when the cash is 2,37,000, passbook balance is increased. As I said, that the checks issued but not presented. That table which I have shown on that basis. So 2,37,000 plus 1,51,000, 3,88,000. Here, balance as per passbook is 2,43,000. Checks deposited but not credited is 1,39,000. So what must be my cash book balance? We can pause for a while and we can use our calculators also and we can think of it as an answer. So checks deposited but not credited. So what happens? This information is known to cash book, but not known to bank. So passbook is 2,40,000. Information is not known to bank, not known to passbook. So what happens? Check deposited but not credited. It will add it up, and you get cash book as because information is not known to passbook. So you see, if you are not analyzing this situation in a hurry, in the moment of exams, when I have to choose the answers, the lack of time. So it's also advisable that you practice this type of questions because, or you have to understand and you practice same questions you try to solve again and again because, or such type of questions because you know that at that point of time, the exam, definitely we will make a mistake of thinking in the very no, conventional way that this should happen like this, but it will be different. So here the information is not known to passbook. So cash book 2,37,000 and 1,51,000, it will be added up and you get. Here also, you can see that the balance is passbook given, checks deposited but not credited is 1,39,000, and you can see that I have highlighted it as 3,82,000. The balance as per passbook is 2,43,000. Insurance premium and bank charges is 26,000. What should be the cash book balance? So the information is known to bank, but not known to the company. So what you have to do is at that time, this information is not known to cash book. So you have to add it up and you can see because the information is not known. The information is not known to the cash book. So you are adding these transactions. So from the passbook, whenever arriving at the cash book, you are doing this. We are adding this transaction because it is not known. So information is not known to the cash book. So whatever information is known or information is not known. So we can have revision on this also. Again, I can talk on the revision on this. So insurance premium and bank charges, you can see it's 2,69,000 when you add it up. Same thing it came here, 2,69,000 and it's added up. Here, passbook balance. Now, once I say this is more easier to know information not known to cash book, it will be deducted and you get this balance. So because something is known to passbook means it should reflect in passbook if it is a bank transaction. Okay. So when it is there showing the cash book means that much will be deducted, 26,000. Balance as per passbook is 2,43,000. Interest credited by bank is 20,000. What should be the cash book balance? Now the transaction is not known to the cash book, but we have to find the cash book balance. Now, when the balance as per passbook is 2,43,000, definitely it has taken that interest of 20,000, which is not known to the cash book. Now, cash book should behave that it is not having that interest. That is what is the cash book balances. So, not known to cash book. So, you take it out and it is 2,23,000 because cash book doesn't know about it. So, the passbook balance is taking this interest into account. The passbook balance is there. So, it is 2,23,000. Balance as per cash book is 2,37,000. Interest credited by bank is 20,000. Now, what is the passbook balance? Similar, if you think of passbook balance, now passbook is something where the bank transaction should be added up to the cash book because this information is not known to cash book, but it is known to the passbook. So, passbook should add this balance of 2,37,000 to 20,000. It should add back and get 2,57,000. So, you are getting here the passbook balance is 2,57,000. So the type of differences, this we will be discussing in the next session. So before going here, so first what we saw is, the causes of differences are given or not given, how you solve it. Now, first we show in a company manner that when causes of differences are not given, we are trying to solve when causes of differences are not given. That's how companies try to work it. We do not have the information. Now, in the second session, when I will be talking about, you will be given the causes of difference. You will just have to segregate it and then you have to do the reconciliation. So reconciliation, how you will do? You adjust the cash book and you do the reconciliation. So This we will discuss it. So I will also revise it, whatever I have talked on these MCQs, and this talks about the basic concepts. I will revise it. And before that, before going to this revision, I will let me first attend the questions. And hopefully after this attending of questions, our revision would be much fruitful. So many people had a lot of doubts, and there is Satyajit Pradhan has a lot of questions to ask. So before going to MCQs, let me see the questions. Um, First question is by Pavan Kumar. Is Pavan Kumar, the passbook is opposite of cash book. Okay. Okay, I'm seeing some particular questions and I'm answering whichever I think it is better to answer such type of questions. And some are suggestions. I'm happy that students are also giving some suggestions. They are adding some points. Very happy. And हिंदी में explain कीजिए. So I think तो हिंदी में अच्छा से थोड़ा बात कर लेंगे तो भी अच्छा है. हिंदी में explain करने से तो if people are comfortable in Hindi, so instead of English मैं हिंदी में भी बात कर लूंगा. बट लिखाई तो इंग्लिश में है, तो इंग्लिश में दिखाना पड़ता है. ठीक है. तो एक डाउट था. हाँ, पवन कुमार ठीक बताया, पासबुक कैशबुक का अपोजिट है. एक डाउट था यहाँ पे इसका. एक जन लिखे हैं कि आई नेवर गेट दिस चैप्टर. वो चाहते हैं कि लेट दिस चैप्टर शुड नॉट कम, बट व्हाट टू डू, बैंक रिकॉन्सिलेशन सबसे इंपॉर्टेंट चीज है. ओके, चैट सेक्शन तो डिसेबल किया गया है, चैट सेक्शन. सो सत्यजीत प्रधान का क्वेश्चन क्या था? बिकॉज दिस Pavan Kumar ne cash book follows modern approach and passbook follows traditional approach, debit income, expense or incomes. See, Pavan Kumar, there is, it's not about accounting is now following the modern approach. Cash book treats, the bank as an asset, but the bank treats the customer as a liability, because whenever you are depositing money in the bank, no, you want to get the money. So that's why it's not about modern approach and passbook approach, but it is cash book versus passbook. Now, uh, not able to go to next section, into entries. So just Satyajit and others, there is Harmanpreet Kaur. That question of Harmanpreet Kaur is also not visible. I will just ask the team to just either allow you to speak one by one. Okay. So just give me 1 minute. I'll ask the team.
Good afternoon, sir. Sir, your mic is muted. I can't hear you.
Okay, good afternoon.
Good afternoon, sir. Sir,
Yeah.
my first question is, sir, if check is delayed in case of bank payments,
Hmm.
then what is in the case of cash payments if we convert check into cash?
Hmm.
Can the bank give us instant cash or in that case also they will take the time?
Say, there is a limit. If you see, ask the companies up to 20,000, you can do cash transactions. Beyond 20,000, you have to use checks. Okay.
Yes, sir. Suppose a bank has paid me 1 lakh, so can I convert it on the place only
No, 1 lakh bank has given you. How bank has given you 1 lakh? It's through
on the
RTGS
check
or
payment?
through RTGS is check payment. So normally what happens? No, check is it's not a. You are a company means company has account. Company doesn't. I think you have studied accounting. No, business and owner entity different, right?
Yes, sir.
Suppose you are a owner, you are drawing money, that's a separate issue you are getting in, trying to get in cash. Okay. And that too, there is a limit also whether they want to pay you in cash or not. Now, consider a company doesn't take money like this individually somebody it may appoint as a spokesperson to do cash transactions within a limit of 20,000. Like I am talking in Hindi also so that people will be able to understand. तो क्या होता है ना,
Yes,
जो
sir.
कंपनी एक संस्था है, उसका कोई इंडिविजुअल आदमी नहीं है कि वो कैश में ट्रांजेक्शन लेगा। तो चेक का है ना, तो चेक में नॉर्मली अकाउंट नंबर लिखा जाता है, तो वो अकाउंट में ही पैसा आएगा। ठीक है। तो मान लो एक कस्टमर है, वो चेक में देता है, वो चेक में कस्टमर कंपनी का अकाउंट नंबर लिखता है।
जी
ठीक है। मेरा मेरा यहाँ पे जो मैं जो पढ़ा रहा हूँ ये चीज, मेरा पढ़ाने का एक ही मकसद है कि आप लोग एग्जाम में कैसे पास कर पाए। ठीक है। आप में एग्जाम में अच्छा नंबर कैसे रखें, ना कि हम लोग ये बारे में सोचें कि चेक का क्या होगा। वो सोचने के लिए जब हम कंपनी में काम करें वो एक्सपोजर ऑलरेडी आ जाएगा। जब आप चार्टर्ड अकाउंटेंट बन जाए होंगे तो आपको ये रेगुलेशंस के बारे में बहुत मालूम चल गया होगा। हमारा एक ऑब्जेक्टिव है कि हम लोग कैसे ये एग्जाम को अच्छा से करें, प्रैक्टिकल चीज को जाने। ठीक है। ओके।
जी सर। और
ओके सत्यजीत, ठीक है। देन देर इज प्राज्वल। प्राज्वल आप अनम्यूट कर सकते हैं।
सर मेरा इनफ्लो और आउटफ्लो ऑफ द बैंक।
Hello.
हाँ प्राज्वल।
Sir, can we either start by cash book or passbook? We can
हाँ
start
हाँ,
from both,
कोई
na?
भी आप कोई भी तरीके से कर सकते हैं, क्वेश्चन के ऊपर डिपेंड करता है। तो क्वेश्चन कैसा आएगा, देखिए मेन चैलेंज क्या है, क्वेश्चंस को अटेंड करना। ठीक है। जो पहला सेशन में मैंने आपको सारा स्टोरी बता दिया क्या क्या होता है। सेकंड क्लास में ना हम लोग को क्वेश्चन को कैसे हैंडल करना है वो जानना पड़ेगा, वो बहुत जरूरी है। क्वेश्चन जिस तरह से आता है हम लोग उसी तरह से जाएंगे। देखिए ये आपका मर्जी है, आप दोनों साइड से जा सकते हैं, लेकिन पासबुक से जाने से क्या दिक्कत नहीं होता है कि पासबुक में क्या बैंक का स्टेटमेंट्स नॉर्मली प्रिंटेड और ऑथेंटिक होता है, बैंक से एरर होने का चांसेस बहुत कम रहता है। राइट। बहुत ही कम रहता है नॉर्मली। तो हम लोग क्या है ना, बैंक से प्रोसीड करके कैश बुक जाते हैं तो हमको धीरे चीज पता चल जाता है। बट रिवर्स भी हो सकता है, इसीलिए हम लोग क्या कर रहे हैं ना, वी आर गोइंग फॉर एडजस्टेड कैश बुक। मतलब हम अपना एरर सारा चेक कर लेते हैं, सो दैट वी आर प्रिपेयरिंग द एडजस्टेड कैश बुक। एडजस्टेड कैश बुक को हम लोग फिर बैंक बुक के साथ मैच करने की कोशिश कर रहे हैं। दैट वी विल डिस्कस इन द नेक्स्ट सेक्शन। आई थिंक इट
So
क्लियर्स योर
then
डाउट
first we
प्रज्वल।
have to adjust the cash book, sir.
यस यस यस।
And then we can prepare the reconciliation.
हाँ बट यू कैन गो बोथ वे, बट देर शुड बी सम सिस्टमैटिक अप्रोच। ठीक है।
Okay, sir. Okay, sir. Thank you, sir.
थैंक यू। पीयूष शर्मा। ओके। पीयूष। यस। हाँ
सर
बोलो
अगर हम
पीयूष।
अगर बैंक में क्रेडिट कर दिया रॉन्गली, मतलब पैसा जोड़ लिया 1 लाख रुपए, जो कि है ना बैंक की मिस्टेक हुई, और हमने कैश बुक में एंट्री कर दी है, तो उसको फिर कैसे रिकंसिलेशन करेंगे?
ने गलती से 1 लाख क्रेडिट कर दिया है।
हाँ, तो हमने कैश बुक में भी एंट्री कर दी फिर उसके बाद में, और फिर बैंक वापस काट लेती है एक
देखिए
लाख को।
प्रैक्टिकली प्रैक्टिकली मैं तो अकाउंट्स में था, अकाउंट्स का हेड था, मुझे जितना मालूम मैं बोल रहा हूँ, मैं जितना मेरा तजुर्बा है। प्रैक्टिकली
यस।
जब 1 लाख की क्रेडिट होता है तो हम लोग उसका कस्टमर डिटेक्ट करने का कोशिश करते हैं। राइट।
यस सर।
आपने देखा होगा कहीं कहीं जगह में हम लोग जैसे सत्यजीत प्रधान का जो क्वेश्चन था उसका ही मैं एक नोट बोल रहा हूँ। मैंने जब आपको कैशबुक पासबुक दिखाया, किस जगह में बाय कैश टू कैश था, दिखे ना नहीं।
यस।
तो वो वाला कैश वाला ट्रांजेक्शन है, कोई कैश 1 लाख जमा कर दिया, कोई कैश 2 लाख जमा कर दिया, जिसके बारे में आपको मालूम है, ठीक है।
यस
या
सर।
आपने ही कंपनी में से कैश, आपका कैशियर ने सोचा कि मुझे आके बोला, मैं कंपनी का ओनर हूँ सर, हमारा कैश 2 लाख करना चाहिए तिजोरी में, 5 लाख हो गया है। तो मैं बोलूंगा भाई 5 लाख कैश रख के हम लोग के लिए इंटरेस्ट नहीं मिल रहा है, बेकार में रख रहे हैं हम लोग, फिर डर भी है, इतना कैश रख रहे हैं, तो मैं काम करो, 5 लाख में से जाके 2 लाख जाके डिपॉजिट कर दो बैंक में, करेक्ट। तो वो
यस सर।
जाके क्या करता है, बैंक में डिपॉजिट करता है। तो उसमें क्या होता है, वो हमारा टू कैश हो गया, हमारा बैंक अकाउंट को आ गया, लेकिन उसके पासबुक में वो क्या लिखेगा, बैक कैश लिखेगा, ठीक है,
यस सर।
बराबर है।
यस सर।
मिरर इमेज है, हमारा एक्चुअली कैश आ गया हमारे पास, लेकिन बैंक के लिए वो कैश उसको देना पड़ेगा कभी भी, इसलिए वो उसका लाइबिलिटी हो गया, ठीक है। मैंने अगर बैंक को 2 लाख कैश दे दिया, मतलब बैंक को मुझे वो 2 लाख कैश मैं जब मांगूंगा वो देना पड़ेगा, करेक्ट।
यस सर।
So it's an obligation for the bank that bank has to give me जब when I'll ask, so that's why बैंक उसको बाई कैश करके लिखेगा, क्योंकि वो लाइबिलिटी हो गया है बैंक के लिए, क्रेडिट साइड में लिखेगा, ओके। तो
यस सर।
बैंक का चार्जेस जो है वो डेबिट साइड में क्यों लगता है, क्यों बैंक जो चार्ज तुमसे काटता है, तुम्हें कंपनी हो, पीयू से कंपनी है, पीयू से जो 5,000 काटता है वो बैंक को मिलता है, इसलिए वो डेबिट साइड में लिखता है, क्योंकि वो बैंक के लिए एसेट है, तुम्हारे लिए वो बैड न्यूज है, बैंक के लिए वो गुड न्यूज है, ठीक है। अगर
यस
आप
सर।
इस हिसाब से सोचेंगे, बैंक चार्जेस हो, इंश्योरेंस प्रीमियम चार्ज हो, तुम्हारे लिए वो बैड न्यूज है, बैंक के लिए वो गुड न्यूज है, ठीक है। लेकिन तुम जब कैश डिपॉजिट करते हो तो बैंक को कभी ना कभी वो कैश देना पड़ेगा, सो उसको क्रेडिट में लिखता है ना। नॉर्मली जैसे तुमने बोला कि ट्रांजेक्शन आता है, इंसान के बारे में पता नहीं, एंड वो ट्रांजेक्शन में उसका कुछ भी नाम नहीं है, ओके। तो इन दैट सिचुएशन वी वांट टू ट्राई टू ट्रेस इट आउट, दोनों ट्रेस करना कोशिश करते हैं, एंड वी यूजुअली ट्रेस इट आउट, वी कॉल टू डिफरेंट कस्टमर्स। इट्स अ वेरी हेक्टिक जॉब, इट्स यू हैव आस्क्ड अ वेरी गुड क्वेश्चन। बहुत हेक्टिक जॉब है, काम भी होता है, पता भी चलता है, नॉर्मली हम लोग उसको अकाउंट फॉर करते हैं, उसको कस्टमर मिल भी जाते हैं, ठीक है।
सर मेरा क्वेश्चन वैसे
अगर नहीं,
रॉन्गली क्रेडिट
हाँ
था। रॉन्गली
हाँ
क्रेडिट
हाँ,
कर दिया बैंक ने। रॉन्गली
क्या हुआ,
क्रेडिट कर दिया था बैंक ने।
किसका, आपका।
हाँ, बैंक ने रॉन्गली क्रेडिट कर दिया 1 लाख। और
हम्म,
हमने कैश बुक में एंट्री कर दी, और फिर बैंक ने वापस अपनी बुक में सही कर दिया, और है ना, हमने अपनी कैश बुक में सही नहीं किया, तो उसकी एंट्री कैसे होगी मतलब?
एग्जैक्टली exactly, तो वो क्या होता है ना, एरर में जाता है,
अच्छा।
एरर्स में चला जाता है वो
यस।
उसको आप चेक ट्रांजेक्शन, बैंक ट्रांजेक्शन नहीं बोल पाएंगे, उसको एरर कैटेगरी में डालेंगे उसको, और उसको एरर कैटेगरी की तरह डील करेंगे।
यस सर, थैंक यू सर।
ओके, थैंक यू। हरमनप्रीत, हरमनप्रीत, या हरमनप्रीत हैज रेज्ड हैंड, हरमनप्रीत आप अनम्यूट कीजिए, कुछ प्रॉब्लम आ रहा है शायद, हरमनप्रीत अनम्यूट कीजिए। हाँ हरमनप्रीत, आप बोल सकते हैं।
हेलो सर।
हाँ हेलो।
सर जो आपने आज कराया वो बेसिक था।
हाँ वो बेसिक कॉन्सेप्ट था, क्योंकि नेक्स्ट क्लास जो है, आई थिंक वेडनेसडे है या थर्सडे है, जो भी है उसमें हम लोग प्रॉब्लम्स करेंगे, ये तुम्हारे समझने के लिए था, लेकिन तुम्हारा एग्जाम के लिए कैसे अटेंड करना है वो इंपॉर्टेंट है, सेकंड क्लास, उसमें तुम एग्जाम। बेसिक मैंने देखा है कंपनी में कैसे वो रिकॉन्सिलेशन करते हैं, रिकॉन्सिलेशन क्यों जरूरी है, क्या क्या वजह से ये प्रॉब्लम्स आते हैं, तो मेरा हिसाब से है कि इसको थोड़ा, ये जो सारा स्लाइड्स है इसको थोड़ा पढ़ लीजिएगा। आई थिंक आप लोग को स्लाइड शेयर किया जाएगा, आई थिंक।
ठीक है सर, और आप ही अब कंटिन्यू करेंगे क्लास को।
Student, you can see the schedule.
हाँ शेड्यूल आप देख लीजिए मेरा कब कब है, ठीक है। तो ये मेरा पहला वाला बेसिक स्टोरीज था। देखिए इसका रिवीजन कैसे होगा, हम लोग जब सेकंड क्लास करेंगे तो इसी के बारे में ही हम रिवीजन करेंगे, बिकॉज सेकंड सेशन में ना हम लोग जो सीए फाउंडेशन का क्वेश्चंस आता है ना उसको डील करने के लिए, क्योंकि अगर ये क्वेश्चंस को हम लोग, बैंक रिकॉर्ड से क्वेश्चन हमेशा आता है, और इसको कर ले तो पूरा मार्क्स मिल गया पूरा, अगर आप ठीक से कर लिए तो इसलिए मैंने ये जो फ्लो चार्ट दिखाया है, थोड़ा इसको याद रखिएगा, हम लोग उसी फ्लो चार्ट की तरह ही उसको टिक करके ये करके हम लोग उसको एक अच्छा अलग तरीके से सॉल्व करेंगे। उसका एक ट्रिक है उसको सॉल्व करने का, प्रॉब्लम्स को सॉल्व करने का ट्रिक है। आज मैंने आप लोगों को स्टोरी बताया है, लेकिन प्रॉब्लम सॉल्व करने का जो ट्रिक है वो मैं आपको सेकंड सेशन में बताऊंगा। ये स्टोरी क्यों बताना जरूरी था, क्योंकि ये स्टोरी इस क्वेश्चन को लिंक है, ये कॉन्सेप्ट जानना जरूरी है, सो दैट वो क्वेश्चन तुम आंसर कर पाओगे।
नहीं
सो
सर, संकेत सर नहीं आएंगे।
पता नहीं, आप पूछ लीजिए।
Student, you can see the schedule.
ओके सर।
हम्म, ओके हरमनप्रीत, और कुछ डाउट है आपका?
नहीं सर।
ओके, थैंक यू। या नेक्स्ट है सोमिल अरोड़ा। हाँ, सोमिल अरोड़ा,
Yes.
पूछ लीजिए, क्या सवाल है?
Sir, are we need to prepare format in the exam?
हम्म, आई एम नॉट एबल टू हियर यू, क्या है सोमिल अरोड़ा, बताइए।
Sir, are we need to prepare format in the exam?
फॉर्मेट इन द एग्जाम मतलब समझा नहीं।
सर हमें फॉर्मेट बनाना पड़ेगा क्या बैंक रिकंसिलिएशन का एग्जाम के अंदर?
हाँ, फॉर्मेट तो बनाना पड़ता है, लेकिन फॉर्मेट बहुत ईजी है, वो इतना टफ नहीं है। ये फ्लो डायग्राम में तुम लोगों को समझाने के लिए, क्या फॉर्मेट क्या है वो हम लोग नेक्स्ट क्लास में डिस्कस कर लेंगे। आपका स्टडी मटेरियल में वो फॉर्मेट है।
Okay, sir. Thank you.
थैंक यू। मोहम्मद सर।
Sir, Chandrabhanu Das, sir,
या
Priyamvada here.
या या
I would like to address students for 2 minutes.
या श्योर।
Yes. See, students, we have started the class, and sir is focusing on the basic concepts right now that he wants you to understand how it is prepared. Yes, apart from your query, one student has asked, do we need to follow the format? Yes. While doing the paper, while in your solving the question in your paper, you have to follow the format given in the study material, and you can follow any method. If it is not mentioned anything, you can follow any method but yes, if it is specifically asked to prepare as per the specific method, maybe a plus minus format or using the straight format, then you should follow that format only. Okay, so this topic is taken by Chandrabhanu Das sir only right now, and he'll be taking all the questions there in the study material. We'll try to complete the most of the questions there in the study material. Please be patient, listen to him first for the concept clarity, and we'll be doing the questions also. Okay. Is there any other query related to format or something? Any examination of format? Mohammed Saad, can you can ask the query?
यस मोहम्मद सर, यू कैन अनम्यूट योरसेल्फ।
यस सर, गुड मॉर्निंग,
हाँ,
गुड आफ्टरनून सर।
गुड
सर
आफ्टरनून।
मुझे ये पूछना था, क्या कहते हैं सर, जैसे कि क्वेश्चंस के अंदर बोला जाता है एज पर दी बैग वो पासबुक और कैश बुक।
हम्म।
एट द एंड ऑफ द क्वेश्चन सर लिखा हुआ होता है एज पर दी पासबुक एंड कैश बुक। सर मुझे इसका मीनिंग आप थोड़ा एक्सप्लेन करेंगे? जैसे कि सर हम 11th में करते थे, अगर जैसे कि उन्होंने कैश बुक बोला है तो अकॉर्डिंग हम पासबुक बनाते थे कि एंड
हम्म
में हमारा पासबुक का बैलेंस है।
हम्म
तो सर
हम्म
इसमें भी वही सेम है?
हाँ, तो इसमें आपका क्वेश्चन का नेचर डिपेंड करता है ना। मान लीजिए आपको नॉर्मली क्या बोलते हैं, बैलेंस को दो तरह से करिए, पासबुक से अराइव करके कैश बुक का ये बोलते हैं, नहीं तो कैश बुक अराइव करके पासबुक का ये बोलते हैं, नहीं तो ऐसे ही बोलते हैं कि प्रिपेयर द एडजस्टिंग कैश बुक एंड देन प्रिपेयर द बैंक, और कभी कभी बोलते हैं प्रिपेयर द बैंक रिकॉन्सिलिएशन स्टेटमेंट, राइट।
यस
सो
सर।
व्हाट हैपेंस इज, इसलिए मैंने बोला सेकंड सेशन में हम वो सब क्वेश्चंस को डील करेंगे। सो इन सेकंड सेशन नॉट ओनली दो स्टडी मटेरियल क्वेश्चंस, आपका सीए फाउंडेशन में भी जो क्वेश्चंस आता है, देखिए मैंने बिल ऑफ एक्सचेंज को, ये आपका बिल ऑफ एक्सचेंज इज नॉट इन दैट पोर्शन ऑफ बीआरएस, बट थोड़ा मैंने
यस सर।
इसलिए हिंट किया क्योंकि बिल ऑफ एक्सचेंज को लेके सीए फाउंडेशन में बहुत सारा क्वेश्चन बीआरएस का आता है। बैंक
यस सर।
रिकॉन्सिलिएशन का बिल ऑफ एक्सचेंज को लेके सीए फाउंडेशन में एग्जाम में आता है। इसी तरह तो जो क्वेश्चंस है वो सेकंड सेशन में मैं इसको डील करने का सिखाऊंगा कि आपको इस तरह का क्वेश्चन को कैसे डील करना है। सो नॉर्मली पहले आप डिफरेंसेस जानते हैं, ठीक है। आपका प्रेजेंटेशन का तरीका बहुत सारा है, लेकिन एग्जाम में एक प्रेजेंटेशन का तरीका मांगता है, जो फॉर्मेट एग्जाम मांगते हैं हम लोग को उसी फॉर्मेट में उसको देना है, ठीक है। क्वेश्चन का
सर एक
रिक्वायरमेंट।
रिक्वेस्ट आपसे एक थी, आप सर थोड़ा हिंदी प्लस इंग्लिश करके बोल लेंगे सर?
हाँ, जरूर जरूर
तो क्या
जरूर,
कहते हैं,
मैं आई अंडरस्टूड
तो
इट
आप
टुडे,
लेक्चर्स के
सो आई विल ट्राई टू मेक इट मोस्ट ऑफ हिंदी एंड देन इंग्लिश।
इंग्लिश और
सो आई
यस
थिंक मुझे लग रहा है कि लोग कंफर्टेबल होंगे हिंदी में, ज्यादा दिक्कत नहीं होगा, मैं वही सोच रहा हूँ तो।
I would also like to add one thing, Said. See, in
यस मैम।
11th standard also, you used to prepare bank reconciliation statement, not balance bank's book. or cash book. See, the
Yes,
balance
ma'am.
will
Yes.
be given. At the end of the question, you'll be given, you have to prepare bank reconciliation statement. If the question is starting from balance as per cash book, then obviously you
Yes.
have to arrive at the balance as per bank book. And if the question is starting as per balance as per bank book, as per the bank statement, so you have to arrive the question for the question as the balance as per cash book. Okay,
Yes,
so
ma'am.
you have to
Yes.
see the nature of the question and it will be clearly mentioned. If it is mentioned only the prepare bank reconciliation statement, then see from where the question is being started.
Yes, ma'am.
And if it is specifically asked you to prepare bank adjusted cash book, then only prepare the adjusted cash book. Rather, you should prepare. If it is done at the end of, sir will be taking, so you'll get to know when to prepare that. Okay.
Okay, ma'am. Yes, ma'am.
Sir,
Thank you.
I would request you to please take the class mostly in English because there are some
Yeah.
South students also. So they
Okay.
find it difficult to understand. Rather, the Hindi medium students can still understand English, but they won't be
Okay.
understanding. South people won't be understanding.
Okay. Fine.
Okay.
So
Yes.
while answering the questions, if somebody wants in Hindi, I can answer the question in Hindi.
Yes.
So Kiran Dhanwani, you can unmute yourself.
Hello, good afternoon, sir.
Good afternoon.
Yeah, sir. Actually, my question was that regarding the slides, you said no, the slides are going to be uploaded after this class. So this is my first day of class, so I don't know where is this going to be uploaded.
I will
I
take
have
this query. See, it will be uploaded in the notes section when you've joined the class there, or either if you go to ICAI.org, when you click to BOS Knowledge Portal, there is a, when you log in with your registration number, so you'll get an icon called Notes, so you can download from there. But you have to wait, download tomorrow. All right.
Okay, thank you so much.
Next, please, Palak Jain.
Yes, miss. I want to ask that my ICI app is not working.
See, for that, you please mail your query. This is not the right platform. Mail your query at bosmobile@ici.in. Okay? Okay,
Okay, thank
next,
you, miss.
Pravanch. Please ask your
Hello.
query. Yes, Prajwal.
Will it be same Zoom link for the all classes?
See, for the next class also, it will be the same Zoom link. And next session is on Wednesday. Okay?
Okay.
Please see the announcement schedule. Schedule already hosted on website. You can see that. Okay?
Yes, sir.
Okay. Sir, you can take the session, continue with the session.
Okay. So I think all questions over or kuch hai? Anything is there? Okay, so what I was telling is with the final revision, we will talk on these MCQs. Okay, and this will help you to understand what is the cash book and what is the passbook and when it needs reconciliation. Okay, so first of all, as I said, everything we first focus on three things. TTE. Any bank reconciliation, you focus on three things. TTE. TTE means timing, transactions, errors. So please understand that. First of all, your bank book is not matching with the bank column of cash book. You have to reconcile. For that reconcile, you have to find three types of errors, three types of differences. One is timings, one is transaction, one is errors. Once you find these differences, then you have to see whether you have to add it or subtract it, what you have to do it. That is what we have understood. Now, then we have to understand that when the events come, like timing events or transaction events, error events, when it happens, how is the position of the balance in both the books and what should be the position in both the books. So this is what is the basic thing today I discussed. So what I told you basically is normally that how the timing differences occur, how the transactional differences occur, and how the errors occur. Now errors are very minor, and normally errors mostly you will see is by questions showing that it is committed by the cash book. Some minor errors it shows it as the passbook, believing that passbook is very authentic. Timings are basically all the information which is known to the company, not the bank, because timings are basically difference arising due to checks. Now, whatever checkbooks you have, I have my checkbook, I get checks from the customer. So those information are there with me. So when the information in solving the bank reconciliation statement, the important criteria is knowing with whom the information is there. So the information is there with the company or with the bank. Now all the checks are mine. Customer who gives me checks are mine. So information is with me. So the timing differences can arise due to myself, me only doing it. So that is not known to the bank. But somehow happens that somehow bank does some transactions and those transactions are not known to me. So that way, due to these transactions, there is a difference in balances. So that is the transactional differences happening due to this situation arises. Then we have errors also. Errors can be by the cash book and pass book. So these errors, all of these things we will be dealing detailing. I have shown you how the errors have been dealt with in these slides. This will be dealing in the next sessions. Now, just to understand one thing, here what I was showing here, that bank balance as per cash book is less than passbook. When it happens, when the check is issued but not presented for payment. Now, when you issue a check, it is known only to you only, the company only. Passbook doesn't know it. So in that case, so checks is issued and not presented. So there is given that bank balance per cash book is less than passbook. Now what happens is bank balance as per cash book is more than passbook. How it happens? Now when the bill is dishonored, आपका check dishonor हो गया, you do not know about it. You do not know about that information. So at that time, the cash book balance which definitely will be more than the passbook. This is these two things. You must apply your common sense to understand these two things. So that's why what you have is your bill discounted with bank means you get money. So cash book balance has increased, but suddenly that bill gets dishonored after some 30 days because I showed you the process of bill discounting. What happens is first lot you get the money before 30 days. Then after 30 days, bank calls the supplier, the customer. Customer says that I don't have money. I don't have money, I become bankrupt. Now, when the customer says I have become bankrupt, by the thing, company doesn't know it, only bank knows this because the bill has been discounted with the bank. So what happens? The passbook dishonors that bill, which is discounted. So in that case, your bank balance as per cash book is always more than the passbook. I think it is clear to all of you. Yes, Palak Jain has again raised hands. Okay, Palak, you can unmute yourself. Yes, Palak, you want to say something? Yes, Palak. Okay. So I think it is understandable to all of you. Then here I was showing that what is the cash book balance. Now bank has allowed interest on savings account to customer. Both the cash book and passbook are 10,000. But what happens is if bank has given interest, that is not known to cash book. So cash book balance will remain the same, but passbook balance will increase. Cash book balance will remain the same. Company doesn't know that some interest has been credited to my account unless it sees the passbook. So that is it. Of course, when we are talking about this, we are not talking about the mobiles where we get the messages, like the individual customers, but for company, they don't rely on these mobile messages. They rely on the internet banking statements and which can be downloaded. So when they download it from the internet banking statements, which they do it at the end of the month or at the end of the quarter to reconcile, they may see something in the download that is in the interest is credited. So till that time, it is not known to the cash book. So that's why the balance remains intact. So I have shown here cash book balance is 10,000. Now here the balance of cash book and passbook is 15,000. Bank has collected dividend of 2,000. So what should be the passbook balance? I am asking you because I'm just thinking that what should be the balance, passbook balance. So here, if anybody can raise hands and tell the answer, if anybody wants to answer it. Just two participants raised hands. You can unmute yourself and answer. Somi Larora.
17,000.
Thank you, Somi.
17.
Okay, next question I will ask to so it's the correct answer like KBC, 17,000 locked. So Somi Larora became a winner on this. Now here I want an answer. Either Somil or Prajal or Harmanpreet, whoever, or Satyajit Pradhan, Kiran Dhanwani can answer. I think Kiran Dhanwani can answer. Yes, Kiran Dhanwani.
It's B option.
Hello.
Sir, it's B option, 19,900.
19,900. Yeah, great. Correct answer. Correct answer it is. So dishonor charges. So 19,900 is the correct answer. So the next option is balance as per cash book is 2,37,000. Checks issued but not presented is 1,51,000. What should be the passbook balance? Who will answer it? Kiran Dhanwani raised the hands. So I think she will again be the winner.
It's B option, sir, 3,88,000.
Wow, correct answer. 3,88,000 because passbook doesn't know about this information. So 3,80,000 is the correct answer. This question, okay, Divya is raising hand. What's the correct answer?
3,82,000.
82,000.
3,82,000. So anybody else? Ashwika?
Yes, sir. Same, sir. 3,82,000.
So we have many KBC winners here. Okay. Now this one, balance as per passbook 2,40,000. Insurance premium and bank charges is 26,000. What should be the cash book balance must be?
17,000.
2,11,000.
Somebody is saying 2,11,000, 2,17,000. We have two contestants here. Acha, Divya is saying 2,17,000. Who is saying? Okay, Muhammad Sami is raising
Sir,
hands.
2,17,000.
2,17,000.
2,17,000.
The option.
And
Yes, sir.
okay, somebody is saying 2,11,000. Who is saying 2,11,000?
2,17,000.
2,17,000.
69,000.
2,17,000. Okay. Okay.
2,70,000.
Okay. So here we will check it. What is happening? Okay. Passbook 2,43,000. Information not known to cash book.
9,000.
So 2,69,000. So I think. So who said the correct answer?
Kiran Dhanwani.
Kiran Dharmani is again winner. Correct answer because you are not known to the cash book, so they add it. So 2,69,000. So see, unless we analyze the question, immediately we think of something, we tend to make a mistake. So we have to check it correctly. Because what is happening here is we are thinking that this is the passbook, but insurance, we have got a bank transaction. But when I'm thinking of cash book, from the passbook, I'm coming to cash book, and this insurance premium bank charge is not known to me, which has already been deducted. From the passbook, this insurance premium bank charge is deducted and it has arrived at 2,43,000. Now, this deducted amount will be added back again. Again, it is added back and we are getting 2,69,000. So Kiran gave the right answer. Hopefully others will also give the right answers. A lot of interactions. Good. Now, what is the what should be the right answer here?
2,11,000.
2 lakh, and who is Divya?
Yes, sir.
Oh, okay, Divya said 2,11,000. Ashwika?
Sir, I'm doing it, sir. Just sir.
Okay.
Sir, 2,11,000, sir.
2,11,000. So
Yes,
it
sir.
is the correct answer. 2,11,000. Right. So once you take these slides, check it, read it once more. You will definitely be clear on this. Okay. Now, what is the cash book balance here? Who will answer? What is the cash book balance here?
2,23,000.
2,23,000.
23,000, sir.
2,23,000 cash book balance.
Yes.
Let me check the correct answer. Yes, 2,23,000. So this is how all of you gave the correct answer. So this one.
2,57,000.
Yes.
2,57,000.
2,57,000. Correct answer. 2,57,000. Correct answer is 2,57,000. So this is the final thing. Tomorrow, next session, we will be concentrating on this is how the approach is given in the study material. With taking this approach, how we are solving, how we are using different tricks to solve the problems. So this is, they are not complicated unless you think it. So when you are able to answer all these questions, definitely I am confident that you will be able to answer the bank reconciliation problems also. So now when you have all have answered very well, and all of you have answered all the questions, that means it says that the next session, you will be able to solve the bank reconciliation problems. If you want, I will upload the slides. If you want the slides. And do you want the slides?
Yes, sir.
Yes, sir.
Okay, I will upload
Yes,
it.
sir.
Okay, I will upload it. I will talk to Priyamada madam and other concerned persons. And where is the link? I will upload in that link. So next session, be ready. In the meanwhile, you can practice the best thing is always come practice prepared before class. Before going to next session, you go to a study material or the CA foundation paper, solve some questions, see how they are solved, check it, solve it. So you will be better prepared. And when we come to the class, we can, by fresh, we can start and we can go into the exciting journey of solving the bank reconciliation statement problems. I will tell you, it will be very exciting when we'll be solving it. Okay. Thank you, all of you. Thank you for your time. Any more questions? Yeah, Mohammed has a question.
No.
Okay. So I think no more questions. So shall we leave? Session over? Okay, shall we leave then?
Thank you, sir.
Thank you. Thank you. We'll meet again on Wednesday.
Thank you, sir. Thank you.
Thank
you,
you,
sir.
sir.
Thank you. Thank
Thank
you.
you, sir.
Thank you.
Thank you, sir.
Thank you. Bye bye. Take care.